Crypto's had a rough run since October. Pessimism has risen. I've known a lot of people that are ready to throw in the towel. I think this is a great time to be talking to you about crypto. I think crypto prices have bottomed. In the next 8 weeks, we're going to shatter the Bitcoin 4-year cycle. I don't think it's going to be a 4-year cycle this time. The crypto super cycle is intact. And why I'm so bullish on Ethereum, because Ethereum is going to be really central casting for the tokenization of the future. Why we're still really bullish on crypto, it's all about tokenization. But that's only part of it.
Today, we got a major update from Crypto Bull and Bitmine chairman Tom Lee, who says that not only are investors still early, but gives a huge prediction for Bitcoin and Ethereum in 2026. As we head into the final weeks of 2025, forced selling, leveraged bets, and the usual tug of war we see when an asset approaches such a huge barrier. The bigger picture looks very different though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. Bitcoin's price sits just over 92,300, still up over 2% just this week. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
If you're bearish on crypto or you think the best days are behind us because of the last 10 years, I'm going to disagree. Keep in mind today, there's only 4.4 million Bitcoin wallets that have more than $10,000. Okay. By contrast, there's almost 900 million individuals around the world with more than $10,000 in their retirement accounts. So if Bitcoin were to be held by all these accounts, that's a 200 times increase in adoption. That's still, to me, exponential and hypergrowth. And Bank of America Fund Manager Survey still shows 67% of fund managers have zero allocation to Bitcoin. Wall Street wants to tokenize all financial products. And keep in mind, financial products today, if you include real estate, it's almost $2 quadrillion that they want to put onto the blockchain. And then, of course, in the agentic world, it's going to create a need for decentralized trust and security, of course, which is what blockchain solves. So to me, I think the best years are still ahead. We believe Ethereum prices have actually bottomed. Now, Bitcoin made a decision about 5 weeks ago to engage Tom DeMark because we wanted to understand what was happening with crypto prices. Now, if you don't know who Tom DeMark is, he's a legendary market timer. At Fundstrat, I've used him to call 2 of the major market lows, the March 2020 low and the April tariff lows. Those were all in coordination and consultation with Tom DeMark. And Tom only has 2 clients today. We're his second client. And he's very expensive, actually. Tom has advised us to dramatically slow our Ethereum purchases. And as you can see here, once we engage Tom, we took a different strategy with regard to our Ethereum purchasing. And you can see our Ethereum purchases fell by half to 50,000 a week. But we've begun to buy Ethereum again. You can see last week we bought almost 100,000 ETH, twice what we did 2 weeks before. And I will give you a hint, we definitely bought more than that this week. So we're bullish on Ethereum. But let's go back to the 4-year price cycle for Bitcoin, because it's still hard to escape this chart. 3 of 3 times since the history of Bitcoin, the 4-year cycle, or 3.91 years, exactly called the top and the lows. So the question is, why is Bitcoin subject to a 4-year cycle? We asked the Fundstrat Digital Assets team to give us the 5 most logical reasons for this. There's the halvening cycle, there's monetary policy, margin debt. But the 2 things that I think have actually become more important in our view is gold versus copper, and then the ISM, which is just your traditional economic business cycle. So let me explain. So the halving could explain Bitcoin because the halving is pre-computed, but the problem with the halving cycle explaining Bitcoin's price is that there's a lot of other things that have a 4-year cycle. Presidential elections, Olympics, World Cup, etc. But there are some things that follow a 4-year price cycle that no longer follow a 4-year price cycle. And one of them is copper versus gold. And this is a tweet from AO BTC analyst. And we decided to recreate it, which is, let's look at the ratio of copper prices, which is measuring industrial activity, to monetary base, which is gold. And in the past, you can see it had a predictable 4-year cycle, except this time. And if you line it up with Bitcoin and copper, they actually line up almost perfectly. But copper and gold are not in a 4-year cycle now because that ratio should have peaked this year. Similarly, is ISM. ISM is a measure of US economic activity, and historically that had a 4-year cycle. But as you can see, the ISM is not following a 4-year cycle today. It's actually stayed below 50 for almost 3.5 years. If you line up the ISM to Bitcoin, you can see it almost perfectly explained every Bitcoin cycle, including the original Bitcoin price peak. So it's even more explanatory than the 4-year cycle. But again, this time the ISM is not peaking. So here's the question I'd ask you. If the industrial cycle is no longer following a 4-year cycle, and copper gold isn't following a 4-year cycle, I'm going to say I don't know if Bitcoin should follow a 4-year cycle. So I'm not in the camp that Bitcoin price has peaked. And the only way we'll know is if we make new highs in January, which is our bet.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
Well, what does that mean for Ethereum's price? Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I mean, that's a huge move. If it gets to the 2021 highs, that's $22,000 for Ethereum. But I think Ethereum is going to become the future of finance, the payment rails of the future. And if it gets to 0.25 relative to Bitcoin, that's 62,000. So I think Ethereum at 3,000, of course, is grossly undervalued. Larry Fink says we're at the beginning of tokenization of all assets. And there's 5 reasons tokenization unlocks things, okay? It's fractional ownership, it does reduce cost, it allows 24/7 global trading, there's more transparency, and in theory, there's more liquidity, okay? But I would say that these are just the raw ingredients. And in our minds, tokenization is actually going to take Wall Street into a next level of evolution. So that's tokenization. I think, of course, you need smart contracts and prediction markets, and really working in conjunction with both is what is, in our view, a huge unlock. And in fact, BitMine is trying to find projects that are really moving this forward. So that gets us to the last point, which is, well, you can buy Ethereum because we're bullish on Ethereum, but I think you should also realize that digital asset treasuries are playing a role in transforming Wall Street. Okay, I'm going to start with Ethereum specifically, but in our view, a proper Ethereum treasury company is actually a crypto infrastructure business, and I'll explain it. First of all, Ethereum is a proof-of-stake blockchain, so Ethereum treasuries are staking Ethereum, so we're providing security. In return, we get a yield, and that's revenue for the treasury companies. And we are essentially improving the security of the network, but also acting as a bridge between traditional finance and the DeFi world. And finally, stablecoin issuers are going to, in our view, ultimately want to stake Ethereum because it is the underlying base monetary layer. But for all of this to work, I think the most important element of a crypto treasury is it needs to have stock liquidity. Stock liquidity is a measure of how Wall Street views that company as relevant to the future of finance. So let's look at the 2 biggest treasuries. MicroStrategy today is the 17th most traded stock in the stock market today. So think about that. Like, let's say that you guys think no one cares about MicroStrategy. Wall Street certainly does. It is trading almost $4 billion a day. It trades more trading volume than JP Morgan, for instance. Now, BitMine, which essentially was created 4 months ago, is the 39th most traded stock in America today. It trades more trading volume than General Electric, which has 30 times the market cap, and it trades almost the same trading volume as Salesforce.com, which is 20 times the market cap. So these 2 companies, according to the equity world, are extremely relevant. In fact, BitMine and MicroStrategy account for 92% of all crypto treasury trading volume. There's 80 crypto treasuries, and these 2 companies are 92% of the trading volume. MicroStrategy is $3.6 billion a day. BitMine's $1.5 billion a day. After that, there's almost no trading volume. It drops off by 90%. Okay, and that's where MicroStrategy and BitMine are pursuing different strategies, because MicroStrategy is purpose-building their crypto treasury to be what Michael Saylor calls a digital credit vehicle. And he's financialized his balance sheet with a series of products, and it's been phenomenally successful.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point, Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.